Banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas, and they look like the banana. So there's some charts that I've shown on Twitter where, you can see the banana zone there on the left side of the chart. The prior banana zone is when suddenly you get consolidation, it goes up a bit, consolidates, and then it just goes bananas.
On Wednesday, Real Vision founder and CEO Raoul tweeted the picture of a lone banana with the caption, "Bananas come to those who wait. Patience." To a common bystander, this will be just another silly internet meme. But to every cryptocurrency investor, this silly meme that is now gaining a lot of popularity in the crypto Twitter community predicts a much-awaited moment that promises limitless opportunities. Pal coined the term banana zone to refer to an impending phase of explosive growth and high volatility for the cryptocurrency market, marked by rapid increases in crypto asset prices and frenzied trading activities. During this phase of the crypto bull market, the entire space will be going bananas and batshit crazy because of the unbelievable opportunities the space presents. Though Pal has not given a specific timeline for the banana zone, he expects it to begin sometime between June and August 2025 and last until June to December 2025. During this period, the renowned macro analyst and former Goldman Sachs executive expects a rapid rise in crypto asset prices and adoption, taking the overall crypto market cap from around $2.5 trillion today to at least $10 trillion next year. This means individual crypto assets will go 3x from current prices, taking Bitcoin from its current $68,000 price to around $270,000 per coin. Pal expects Bitcoin's prices to hit $200,000 in the worst-case scenario. Pal is even more bullish on Ethereum, which he says will outperform Bitcoin, and Solana, which he expects to outperform both leading cryptocurrencies. Pal recently had a discussion with Ran Neuner, the host of the Crypto Banter show, during which they took a deep dive into the current state of the cryptocurrency bull market and Pal's expectations for the banana zone. Pal, a known Ethereum bull, also discussed the recent approval of the Ether exchange-traded funds and what it means for the leading altcoin. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
We've been given the new layer to the internet, which is the internet of value, the layer of ownership, settlement, all of this stuff. Now, unlike the internet, we couldn't own that. We can own this. So the more it gets used, the more the number go up and the more we profit from it. So it's this huge egalitarian democratic way of distributing a huge amount of wealth to a huge number of people. To put it in perspective, this space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to this up, because the opportunity is so big. And that is just by owning the new internet, essentially. So that's what this is all about. So there is a banana zone, which is the periods of time where it goes bananas. Then we get the corrective periods, and then we repeat this cycle again. Now, will everything repeat perfectly? Will it be identical? No. There's no guarantees come with this. But it's based on the liquidity cycle. It's based on the macro cycle. It's based on interest rates. It's based on a lot of things. If you think of what liquidity is doing, why the central banks and governments are injecting liquidity, it's to be able to fund the debts. We're in the big debt funding cycle this year, which is why the banana zone happens and why the everything code cycle, all of this happens. They have to fund all the debt. And so they inject liquidity into the system. They do it via rate cuts. They do it via the reverse repo. They do it via quantitative easing. They do it by any mechanism they can to roll the debt. And that's Europe, the US, China, Japan, the UK, everybody, right? So they all do the same game. So they're all teeing up. They've been waiting for inflation to come lower, ready to start hitting the accelerator. Liquidity has been rising, which is why the markets have been rising. But it gets to the phase where it has to go up a lot to finance, $10 trillion of stuff that needs to be financed. So that's all to come. And that tends to happen this year and next year. And look, Coinbase has 108 million accounts, of which right now maybe 10, 12 million are active. As you start going to the banana zone, that starts going from 10 million to 20 million to 30 million. So suddenly it becomes a lot of voters. Add that to the political power of the firms that are involved in the ETFs, and it's now actually a funding issue for these people as well. Because if they say the wrong things, then the big financial sponsors for their super PACs start applying pressure. So I think it's much more of an issue than they first realized. And I think Liz Warren made a fatal mistake of saying we're building an anti-crypto army without realizing you're fighting a bunch of degenerate meme artists who are native to the internet, who are distributed everywhere. That's not an easy battle to take on. And I think they're starting to realize that this could be their own goal, because obviously RFK as well is running on a pro crypto format. So the Democrats, they either have to kind of fall in line, or they're going to try and say, we are the party that stands against this. But who does that play to? They're not going to get the swing voter by doing that.
In related news, President Joe Biden has vetoed the bipartisan bill to repeal SAB 121. On Friday, Biden notified Congress that he had vetoed the resolution that sought to repeal the SEC's Staff Accounting Bulletin 121, an accounting rule that imposed stiff capital requirements on crypto custodians, making it difficult for banks to provide crypto custody services. The Senate passed a CRA overturning the accounting rule on May 16th, a vote that was celebrated by the entire cryptocurrency industry. About a week before, on May 8th, the White House issued a notice threatening to veto the resolution and reinstate the SEC's accounting rule, stating that repealing it would disrupt the SEC's work to protect investors in crypto asset markets and to safeguard the broader financial system. Friday's notice from the White House vetoing the resolution reads, "This reversal of the considered judgment of SEC staff in this way risks undercutting the SEC's broader authorities regarding accounting practices. My administration will not support measures that jeopardize the well-being of consumers and investors. Therefore, I am vetoing this resolution." The Biden administration's strong anti-crypto stance is quite surprising, especially given how crypto has become a strong campaign point for other candidates like former President Donald Trump. In his notice, Biden stressed that the resolution was led by Republicans, another strong indication that the president's opposition to cryptocurrencies is wholly politically motivated. During his discussion with Rand, Powell also talked about Ethereum ETFs, how they will perform in comparison to Bitcoin ETFs, and most importantly, how their performance will impact Ether prices. Here are more clips from the interview.
I've been following the ETH Bitcoin chart, and I thought it was going to turn. I thought the ETF was coming. I didn't think it was going to come at that particular moment. So, but I did. I even put out some sort of update on this. Just happened the weekend before this news came out. Why we're not getting much follow through right now is we're not getting much new inflow into the system. So people are switching a bit of their soul into the ETH and FOMOing into this trade, but really the game starts when the ETF launches. Because most people are fully allocated. It's not like any of us are sitting with cash on the sidelines, right? So we're all fully allocated. So you have to switch from one to the other. I think people will switch, some of their Bitcoin for ETH to play this trade, but it's the institutional flows. I think the big game in town is going to be what is the narrative that BlackRock comes up with. This is the game. Okay. I think it's going to be tokenize the world. The other thing important to notice is that ETH is a third of the size, and then 20-something% of all ETH is staked. And then there is, if you generate a lot of on-chain activity, you'll end up starting to burn ETH again. So what you've got is actually very limited supply, and most ETH is just held and locked away, either staked or unstaked. So there's very little free float of ETH. It depends what kind of price action we see. all BlackRock need to do is just add it as part of the portfolios. You know, we've seen this before. So I don't know. Will we? Let's say the Grayscale loses 5 billion. Will we get 5 billion of inflows? Probably. Over what time period? 3 months. Outside of the ETF just gives them the cover to use ETH as their foundational layer for the stuff that they want to do. Because Goldman Sachs is not going to be using the ETH ETF. It wants to use ETH, as does JP Morgan's everybody else, to tokenize assets and do other stuff. What is super interesting to Wall Street is yield. Yield allows you to build products. You can do all sorts of things with yield. You can take the ETH yield and buy call options to give you upside or guaranteed products. You can create structured products. You can do lots of things. So I think that they've always been interested in ETH, and I've said this for a long time, is the ETH yield is the big game in town. Not because it's high yield, but you can do lots of financial engineering once you've got yield. They also all want to build on the technology, whether it's on a layer 2 or on ETH itself, but this is where they're going to start tokenizing a lot of assets. Nobody gets fired for using Ethereum. So,
Yes.
That's a choice. And most of these people have been building, most of the banks have been building in this space and had teams since 2015, 16, 17. So if you think of the technology they've been using, it's generally ETH. So they understand ETH. ETH is the big one. You don't get fired for it. Your board's not going to tell you off. Why did you use some random thing? But we've now got the flexibility of the layer 2s, which makes it cheaper and easier, depending what level of security they need. So look, I think it's a very, very big deal for the financial markets. Much bigger than it is for retail.
As cryptocurrencies become a bigger issue during the election, more Democrats will cross party lines to show their support for cryptocurrencies. Trump is really milking the issue to gain as many new voters as possible, and by all indications, he is achieving his aim. Though some people are skeptical about how much sway being a pro-crypto candidate will hold, it is evident that cryptocurrency investors are ready to push back with all it takes until politicians realize the severity of the situation. In the meantime, we have the banana zone to look forward to, with crypto prices set to explode massively. Please share your thoughts on Raoul Pal's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.